Hello, everybody. Chuck Carnevale, co-founder of FastGraphs, the fundamentals analyzer software tool, aka Mr. Valuation, bringing you another subscriber request, 2-minute drill, lessons in valuation video. Today, I'm going to cover Deckers Outdoor, basically a shoe company. And it's a request that I've been asked by several different subscribers to look at. So I'm going to do something a little differently with this subscriber request. Let's go ahead and look at Deckers and consider it as an investment by going through some metrics with you. So first of all, I've got adjusted operating earnings up here on the graph, and you can see that Decker has grown earnings, occasional down year, but they've grown earnings over this long term at 24%. So over the last 8 or 10 years or so, keep in mind I've got 3 years of estimates here, it's been 25%. So now let's go into fiscal fitness and look at some things. The revenue has been growing strongly as of through 2024. The company's margins are very interesting. Their gross margins are high, but their net margin has actually been growing ever so slightly. I consider that a plus. Let's look at share buybacks. This is one I'm going to mention later. They've been buying back shares, reducing share count at about 3% a year since 2014. Okay, I like that if the company's valuation is good. If the company's overvalued, I don't like that. Just keep that in the back of your mind. Now, return on assets have been increasing very nicely. Returns on equity have been increasing very nicely. And returns on invested capital have been increasing very nicely. So all in all, this looks like a really superb company. I can go through other metrics like operating cash flow. Operating cash flow has been growing nicely, and I can just go on. But the point is, let's now look at this great company that's produced these incredible results, and let's look at how the market has treated them. Okay, first thing I'm going to do is I'm going to get rid of the estimates. I'm going to go back here in time a little bit and just put weekly closing stock prices on the graph, because I want you to see that weekly stock prices correlated with earnings. When they got low, they rose. When they were higher, they got high. So the normal PE ratio for this period of time was about 17 times earnings. But watch what happens as I go forward in time. Now, all of a sudden, the stock gets up into a very high valuation. Then, boom, the stock collapses. And this is the point I want to make. Even in spite of all these great fundamentals, the valuation had gotten extreme up here where the PE was almost 38 times earnings, which basically is no earnings yield at all. And now the stock has essentially reverted to the mean and fallen 45%, if you will. And no matter what metric you look at, you're going to see a similar relationship. The stock price got extremely highly valued relative. And by the way, operating cash flow kind of flattened here, which could have been one of the red flags. So in spite of all these great numbers, the company's valuation simply couldn't stand up to this high value that the market had placed on it. It's a great company, and I want you to distinguish and be able to distinguish between a great company and a great stock investment. Great companies are good investments when their valuation is good. And right now, Deckers might be one that you would want to consider going forward. If it got a little bit lower, I'd like to see it a little lower, assuming these analysts are correct. But anyway, that's the difference between a great company and a great investment. Deckers is clearly a great company, has virtually no debt, and yet the market valued it. And with all those great metrics, you can see why the market valued it. But I also want to point out that they were buying back stock during this period of time, and I think that was a mistake. Anyway, this is Chuck Carnevale, co-founder of FastGraphs. If you like the video, give me a like. Subscribe to our channel. Ring the bell so you get notified others, and take a look at FastGraphs. It can really help you make sound long-term investment decisions. I call it the value investor's best friend. Thanks for watching.